right now we're at the PDAC. Currently, we're at the booth of Sierra Metals. So the gentleman standing beside me is the vice president of the company, Mike McAllister. Hi, how are you doing, Mike?
I'm doing very well, thank you.
Yeah, so maybe you can just start off by just giving us a brief introduction about your company. What does you do?
Sure. Sierra Metals is a polymetallic mining company. We have 3 mines in 2 countries. We have the Yaracocha mine in Peru, which mines silver, copper, lead, gold, and zinc. We have the Bolivar mine in Mexico, which is primarily copper, and then we have the Cusi mine in Mexico, which is primarily silver. And we're producing from all 3 assets.
Yes. So quite a few producing assets. So usually investors or people will see a company, either a precious metal producing company or base metal producer. So how do you categorize yourself given the current commodity market?
Well, indubitably, we're a base metal producer. 70% of our production comes from base metals. Although that is growing in silver, at Cusi, for example, we're ramping up production from 650 tons per day last year to 1,200 tons per day to 2,400 tons per day by the end of this year. So our silver exposure is going to grow in Mexico. However, as a company as a whole, I would still say that the largest proponent or the largest metal we're producing is copper, followed by zinc.
So out of all your 3 operating mines, so which one of the 3 is the most profitable at this moment?
At this moment, it's the Yaracocha mine still in Peru. We get the highest NSRs per ton of rock coming out of Yaracocha. However, Bolivar is really starting to pick up and come into its own. We're starting to get some better copper grades, increased production, and we're actually having some good success in terms of exploration, finding higher grade material there.
So what's your corporate overall growth plan? Is it by organic growth or by acquisition as well, or a bit of both?
Well, in all honesty, it's been right now more organic, but that will change just because we had so many brownfield exploration targets that had not been exploited. So we've been doing that, and we're also doing some greenfield exploration. But right now, we're really focused on ramp-ups. So as I mentioned, we're bringing Bolivar from, we were at 3,000 tons per day last year. We went to 3,600 tons per day, and now we'll be at 4,200 tons per day by the end of the year. And then we're going to be going to 5,000 next year at Bolivar. And then at Cusi, we're at 1,200. We'll be at 2,400 by the end of the year. So we have a lot of growth happening right now. So right now, in terms of growth, we're doing it organically by expanding our resources and reserves and expanding our production portfolio. But by 2020, we'll start to look outside of those parameters and start to look at other opportunities outside the company.
I see. So I also noticed that you're managing your debt level quite well. Can you explain a bit more on how they're doing that this year?
Yeah, so in terms of our debt right now, we have about $52 million. The biggest chunk of our debt is the acquisition credit facility for when we purchased the Yaracocha mine in Peru, and that one is it's split into a bullet payment, and we make monthly payments on that, and the very attractive interest rates on that. But we have been servicing all our debt, paying down our debt, and we've actually just are finishing up a $100 million credit facility, $100 million credit facility, which we're going to actually pay out our other existing loans, and we'll just have one facility now. And the benefit to that is that loan sits at the parent company, and we'll be able to loan to the subsidiaries, and as they pay off back the loans to the corporate, they actually can use that as a tax advantage as well, and the holding companies within the countries. Yeah,
that's pretty good. So in summary, why do you think investors should consider investing in the Sierra Metals right now, and what kind of milestone are they looking for in the next 12 months, let's say?
I'm sure you're going to hear this in any story that you hear that we're undervalued, but we honestly do believe we're undervalued. We actually completed 3 PEA studies, and that gave us an NPV per share of about $4.28 US. Currently, we're trading at about $1.71 US, and so just given the cash flow and the present value of the cash flow, the expansions they're going through, there's a lot of opportunity and a lot of growth happening within the company, and it's not being represented in the share price right now. So we think there's nowhere to go but up for us.
So thank you for your time, for sharing with us today.
Thank you very much.
Thank you. Thank you for watching this video. Please scan the QR code to log on NAI500 website and follow us on social media to get regular updates on the Chinese language North American market news, CEO interviews, trends, and investment opportunities. Click subscribe to our channel to watch more interviews and presentations.